the Federal Reserve sees a much bigger problem in the housing market, where housing prices might collapse, in the stock market, where stock prices might collapse, and also just in the enormous cost that the U.S. government has to pay to service a $39 trillion national debt. I think the Federal Reserve realizes that rates need to come down despite the fact that inflation is going up to maintain the ability of the U.S. government to service its debts and to keep the air from coming out of all this asset bubbles that it inflated in real estate, in stocks, in bonds. Now, I don't think the Fed is going to succeed in preventing these bubbles from deflating, but that doesn't mean it's not going to try. And when the rate cuts are not sufficient, and when this new round of quantitative easing is not big enough, all of this is going to be expanded. And that's why these bull market in gold and silver is going to continue. And, I have been really pounding the table ever since I started, I took over the mic on the Schiff Gold Friday market wrap, that everybody load up on precious metals. In fact, I do these on a Friday, and, the markets don't really resume trading until Sunday night, but it's 24/7 at Schiff Gold. You could go to our website and buy gold and silver. You could buy it on Friday night, buy it Saturday morning, Saturday night, Sunday morning. Generally, the prices are pretty much where they closed. And you want to do that. You don't want to wait for Monday, because I think, again, we're going to be very strong on the open. In fact, I expect silver to be back up at the high from today, maybe by Monday. And gold, before gold sold off, gold was up about $70 at the highs today. And it still closed up over $20, even though silver was down, $1.60, right? Gold held strong on the day, even with this profit taking. But gold got less than $30 away from hitting a new all-time record high. Now, if you recall, on the last Schiff Gold market wrap that I recorded, I specifically said that silver was going to hit a new record high before gold. That prediction came true. I also said that gold and silver stocks, the GDX and the GDXJ, which were way off their highs, I said that they were going to hit new record highs or new highs for the year before gold hit a new high. And that prediction came true this week. We had a big move up in the GDX and the GDXJ, both indexes hitting new highs. This is another great sign, because in the prior leg of the gold bull market, gold was going up, but you weren't seeing confirmation in silver. You weren't seeing confirmation in the mining stocks. Now we're seeing confirmation by both. Instead of gold leading silver and the mining stocks, it's following. Silver has now taken over the baton from gold. Silver is leading the charge higher. Yes, it's doing it with more volatility, but it is leading. And the gold mining stocks are now leading the metal. You see, in the earlier stages, a lot of people were looking at the gold rally with a lot of skepticism, because they weren't seeing the confirmation in the silver market, and they weren't seeing the confirmation in the mining stocks, because mining stocks investors didn't have confidence in the gold rally. They expected gold to collapse, and so they didn't want to pay up for earnings that may never materialize. And so there was a lot of hesitancy to buy the gold mining stocks. But now that people are buying those stocks, is because they're starting to realize that these high gold prices are here to stay, that gold's not going to come crashing down. And so these high earnings are going to continue. And in fact, at some point, people are going to recognize that not only are high gold prices here to stay, but they're going to get even higher, that the market's going to keep rising, which means earnings are going to keep rising. And so now stock investors want to get ahead of that. So now we have a more traditional bull market where the stocks are leading the metal, anticipating the increase because stocks are forward looking, right? Stock investors are trying to predict the future when they buy stocks because they're making a bet on what those earnings are going to be. And when you have a nice bull market where investors expect the bull market to continue, you would expect them to pay up for the gold and silver stocks. That's what they're doing. Now, those stocks are still cheap, but at least they're leading the way. And I've always said that in a real gold bull market, silver outperforms. And up until this year, it was underperforming. That's why earlier in the year, you could buy 100 ounces of silver for 1 ounce of gold. Now, I didn't check the ratio, but I think it's around maybe 67 or something. It's below 70 to 1. Still cheap. Silver is still cheap, but it's not nearly as cheap as it was. And remember, when silver got through 50, what was I saying on this market wrap? That was it. That now we have the double top is now support. 50 is the floor. And yes, I said we could go a little bit below it, and we did. We traded a little bit below it. But all of that was buying opportunity. And now we shot up, and now it's likely that silver's not going back to 50 again. It's not impossible, but it's very improbable at this point. In fact, I still believe that silver is going to hit $100 next year. And gold, at least 5,000, probably 6,000, maybe more, depending on what happens in the foreign exchange markets. If we get a dollar crisis, if we get a U.S. Treasury crisis, we're going to get those crises eventually, so it could happen next year. And if it does, then those upside projections are going to be much higher. But I do think that as the world really gets to think about what happened here with the Federal Reserve and their new policy, you're going to see big buying in Asia, in both gold and silver and platinum. By the way, the whole precious metals complex is going higher.
Look, if there were ever a moment in history when the Federal Reserve exposed its hand, it's right now. And I don't mean exposed it subtly. I mean, the Fed basically held up a flashing neon sign saying, "We are trapped." And the mainstream media still didn't get it. That's the part that always blows my mind. The Fed could set the entire building on fire, and CNBC would film a cooking segment about warm investor sentiment. Meanwhile, anyone with a functioning calculator, and I know that automatically excludes half of Washington, can see exactly what's happening. The big story of the week wasn't that gold closed over $4,300, or that silver is up 113% this year, or that gold miners are finally waking up from a decade-long coma. The big story is that the Federal Reserve went back to quantitative easing without calling it quantitative easing. It's like when a vegan tells you they're mostly plant-based while eating chicken wings. You can dress it up however you want. QE is QE, and the Fed is back at it. What did they announce? They're buying treasuries again. They say it's about reserves and market functioning, but the real translation, if you speak fluent Fed, is we can't let long-term rates rise because the US government cannot afford its own debt, and the housing market would collapse faster than a meme stock. The balance sheet is growing again. That's QE. The Fed is monetizing government debt again. That's QE. And I've said for years, literally since the Bernanke era, that once QE starts, it can never be stopped. You don't taper a Ponzi scheme. You accelerate it until it collapses. Look at the numbers. Yields on 10-year treasuries rose after the Fed cut short-term rates. That alone should tell you something is fundamentally broken in the system. Usually when the Fed cuts, yields drop. Not this time. Why? Because the bond market, finally, after years of being asleep, has started to push back. The free market is saying, "No, Jerome, we're not buying your story anymore. Inflation is rising. Supply is exploding. Debt is unsustainable. You want lower rates? Then you're going to have to print more money." It's almost poetic. The Fed is fighting the very monster it created. And why is the Fed so desperate to bring down long-term rates? Because the US government has $39 trillion in debt. That's not a typo. $39 trillion. At the current average interest rate, You're talking over $1.5 trillion a year just to pay interest. And here's the punchline. That interest is being financed with more debt. So we're borrowing money to pay the interest on the money we already borrowed, which we also can't pay back. That's like using a credit card to pay off another credit card and telling yourself you're managing your finances. No, you're headed for bankruptcy, and the Fed knows it. So what do? They buy short-term treasuries. They suppress yields. They pretend it's reserve management. And they hope nobody notices the smoke coming out of the basement. But gold noticed, silver noticed, the miners noticed, and investors in Asia definitely noticed. You want to know who is buying the most gold right now? Not Americans, not Europeans. It's Asia, China, India, Vietnam. These countries are loading up on gold like it's Black Friday, and everything is 90% off. They understand what's coming. They've seen currency crises before. They've watched empires inflate themselves out of existence. They know what the endgame looks like. And this week proved once again why gold is the ultimate truth teller in financial markets. When the Fed lies, gold tells the truth. When Washington denies reality, gold confirms it. When the bond market panics, gold celebrates. And silver, oh man, silver is the teenager that smashes through the door while blasting heavy metal at full volume. I told you weeks ago that silver would hit new all-time highs before gold did. And guess what? It did. I also said the miners would break out before gold. They did. These were not wild guesses. This is how real bull markets behave. In fake rallies, gold leads and miners lag. In real ones, miners lead. That's the difference between speculation and conviction. And here's another way I know this is real. Look at the gold to silver ratio. Earlier this year, you could buy 100 ounces of silver for 1 ounce of gold. That is an absurd valuation. That implies silver was massively undervalued relative to gold. Now we're down to the high 60s. That's still cheap. Historically, the ratio averages around 40. In ancient times, it was around 15. Silver was money long before the Federal Reserve existed, long before the US dollar existed, long before the IRS existed. Although I will say silver probably brings people more joy than the IRS ever will. And what comes next? If silver hits 100, and I still believe it will next year, that ratio is moving even lower. And if gold hits 5,000 or 6,000 or higher, which is absolutely possible the way the Fed is printing, then silver at 100 is still cheap. That's what people don't understand. They say, but Peter, silver doubled already. So what? It doubled from artificially suppressed levels. It's like saying a beach ball suddenly doubled its distance underwater. Yeah, well, pull your foot off it and see where it goes. And that brings me to the mining stocks. I've said for years that they were the most undervalued asset class on the planet. When gold was at 1,800, miners were priced like gold was 1,000. When gold hit 2,000, miners were priced like gold was 1,300. Now gold is over 4,300, and miners still aren't priced correctly. These companies are going to mint money, literally and figuratively. Their margins are going through the roof. Their costs haven't skyrocketed the same way the metal has. They've spent the last decade cutting fat, streamlining operations, and becoming more efficient. Now gold doubles, silver doubles, that's pure profit. And here's the best part. Wall Street still hasn't figured it out. Tech bros are still buying AI stocks at 40 times sales. Crypto influencers are still arguing over whether Bitcoin is digital gold, while gold is outperforming Bitcoin. And retail investors are still missing the biggest wealth transfer happening in real time. Folks, you don't get many opportunities like this in a lifetime. You don't get 1979 twice. You don't get early 2000s bull market setups twice. You don't get silver launching from 20 to 50 to 100 and beyond twice. These cycles come once per generation. And right now, all the signals say we are in the early innings of something big. The Fed is trapped. Inflation is heading higher. Long-term rates are heading higher. QE is back. The dollar is weakening. Asia is buying. Central banks are buying. Sovereigns are buying. Silver is breaking out. Miners are leading. Ratios are compressing. Delivery demand is surging. And the US economy, if you even want to call it an economy, is one interest rate spike away from a full-blown fiscal cardiac arrest.